I now hand the conference over to Mr. Manish Mahawar of Antique Stock Broking Limited. Thank you, and over to you, sir.
Thanks, Aisha. On behalf of Antique Stock Broking, I would like to welcome all the participants on the call of Solar Industries. From the management, we have Mr. Manish Nuwal, CEO and Managing Director, Mr. Dilesh Panpalia, CFO, and Mr. Suresh Menon, Executive Director on the call. Without further ado, I would like to hand over the call to Mr. Panpalia for opening remarks. Over to you, Nilesh ji.
Yeah. Thank you, Manish. A very good morning to all the valued stakeholders. Thank you for joining us on this conference call. As always, I would like to remind you that during the call, we might make projections or other forward-looking statements regarding future events and about future financial performance. Please remember that such statements are only predictions. Actual events or results may differ materially. And our website will be updated with all the relevant information from time to time. So now to begin with, I request our Managing Director and CEO, Mr. Manish Nuwal, for his comments on the company's performance for this year.
Good morning, everyone, and thank you all for joining us on this earnings call for the quarter 4 and fiscal year ended 31st March 2020. Before we begin, let me first express my best wishes to you and your loved ones during these testing times in the COVID-19 scenario. Now I will share the key factors that have led to a decline in our revenue in the year 1920. Heavy monsoons and extended rainfalls continued throughout the late January 2020, which has affected the demand from mining and infrastructure badly. There was a fall in commodity prices, which has resulted in lower realizations. There was a general slowdown in the global and Indian economy, with the GDP recording a low of 4.2%. This has impacted the overall demand in India and overseas locations, especially Zambia and Turkey. Initial challenges in establishing ourselves in new markets like South Africa and Australia were there. Defense product deliveries extended by the customers, and there was delay in getting expected orders. Overseas translation loss of 45 crores was there in this year. Lastly, the COVID-19 pandemic declaration in March, and after which we took immediate actions to create an environment to safeguard ourselves while delivering on the needs of our customers. However, external factors such as lockdowns and restrictions imposed by the government and local authorities has affected in the Q4 of 1920. The impact of the same will continue to be visible in our Q1 of financial year 2021. Even with significant impact to the economies around the world, many aspects of solar's business have proven to be resilient. The recent epidemic has changed the business narratives globally, but strengthened solar's old mantra, which is safety, quality, and reliability. And it's time that our priority remains valuing life and securing businesses to support our community. Our revenues during April 20 were impacted due to COVID, and we did see some improvements during the month of May 2020. But I am extremely happy and satisfied to share that our performances during the June 2020 was even better compared to the June 2019. The way our operations and business recovered during this uncertain time has boosted our confidence. As far as our overseas operations are concerned, the green shoots are quite visible in the countries where we have our presence. We are also finding situations has been improving, and soon it will be in a right place to deliver the better revenues and better bottom line numbers. Manufacturing operations in Ghana has commenced, in the first quarter of 2021. Australia and Tanzania manufacturing facilities will also commence from Q3 of 2021. And as regards our defense business, the RFP for multi-mode hand grenade is in the final stage of approval. We will keep our stakeholders informed on the progress. On a negative note, many RFPs under Make in India program got cancelled. However, the other defense RFPs will soon be initiated by the government under Make in India Atmanirbhar scheme. Also, as per the current reports, India is all set to ban imports of ammunition that can be produced indigenously. This move by the government will surely make us India's key ammunition player. We also expect our margins to improve, mainly on account of defense and overseas turnaround. That being said, it will still be challenging to predict the growth numbers for the subsequent year, that is 2021. We do target and anticipate the top line to cross the last year's number, but on a conservative side, COVID-led uncertainties can impact demand from mining and infrastructure sectors in India. As a result, we may see slippages by about 5 to 10%. The experience from the past downturns indicates that once a downturn is over, the gap widens. So we do intend to capitalize during this testing time to be able to emerge much stronger. We continue to advance our projects, products, and technology roadmaps to serve our customers better. I firmly believe that we remain well positioned with a superior team that will continue to execute and produce strong results in India as well as in our global operations. As such, we have not altered our Capex plans. The current Capex will incorporate capacity enhancements of initiating systems, new products for defense, and expanding our global footprints. However, we will keep a watch on how COVID-19 situation pans out. In conclusion, I will remind you, however, that this situation remains very dynamic and we don't have a crystal ball to exactly predict what lies ahead in the future. Like everybody else, we did sure like to see a vaccine become widely available for all of us. Till then, after considering all the factors, we decided to preserve our reserves to utilize those for our future growth and hence reduce dividend to rupees 6 per share for this year compared to rupees 7 per share last year. Recently, Shri Kailash Chandraji Nuwal, Executive Director and Vice Chairman of Solar Industries India Limited, has vacated Office of Director with effect from 7th November 2019. The Compliance Officer has submitted the required information to the Registrar of Companies and the stock exchanges. With that, I will now ask our CFO, Mr. Nilesh, to take you through the review of financial year 19-20 results.
Thank you. Well, this quarter was an unprecedented period due to the spread of the COVID-19 pandemic across the globe. During this period, the spread of the virus and eventual lockdown resulted in virtually no sales in the later part of March 2020, significantly impacting our sales performance in the quarter by 100 crores approximately. Now we talk about the year. In the year 1920, our consolidated revenue was down by 9%, that is rupees 2237 crores from rupees 2460 crores, and that is 10% lower than guidance of rupees 2500 crores given for the year. The reason for same has already been highlighted by the MD in his opening remarks. So let us quickly review our sales for the year 1920. Domestic explosives volume was down by 6%, that is from 359,116 metric tons to 337,456 metric tons. Realization of explosives in domestic market were down by almost 5.4%, that is from rupees 35,442 per ton to rupees 33,521 per ton on account of fall in commodity prices. As such, our domestic explosives revenue were lower by 11%, that is from rupees 1273 crores to rupees 1131 crores. However, during this year, the initiating system revenue grew by 15.4%, that is from rupees 257 crores to rupees 296 crores, and this was on account of capacity enhancement. Our export and overseas revenue was rupees 793 crores compared to rupees 866 crores, and that is a fall of 8.49%. The overall commodity prices, which were down globally, resulted in lower realizations, which led to lower overseas revenue. Now, the revenue from defense stands at 122 crores in the current year compared to rupees 170 crores as the delivery schedules were shifted by the customers. Now, when we talk about customers in domestic market, revenue from Coal India has decreased by 47 crores. And the main reason was that Coal India had targeted a production of 660 million tons and OB removal of 1407 million cubic meters, against which they could reach 602 million tons and 1156 million cubic meter of OB removal, and these figures were even lower than 18-19. Revenue from housing and infra were again lower, and would like everyone present to note that our revenue from private sector mines has increased as we have now started supplying to private coal mines with more focus. As far as raw material is concerned, the raw material consumption has decreased by 2.6% as a percentage of sales when we compare year-on-year. The same is due to change in product mix, that is, lower explosive sales and higher sales of initiating systems, coupled with improved productivity and efficiency. The employee cost as a percentage of sales is seen increased by 1.76%, and this is due to lower revenue. In absolute terms, it has increased by 22.4 crores, that is 12.17%. However, if the revenue would have been same, then there would have been marginal increase of 1.5%, and that is on account of annual wage and contract labor increase. Other expenses as a percentage of sales has increased from 15.21 to 17.05%, and this is again on account of lower sales. On a similar revenue of previous year, it would have shown a marginal increase of 0.28%, and that also because of some increased sales promotion expenses. EBITDA, in spite of lower revenues for the year, we reported an EBITDA of 475.37 crores, which is 21.25% as compared to 20.99% in last year, and which is in line with our earlier guidance of 21% plus. When we talk about our interest and finance costs, as a percentage of sales, it has increased by 0.43, that is from 2.03 to 2.46%. When we compare year-on-year, in absolute terms, it has increased by rupees 5.17 crores, and this is due to higher borrowing, especially in overseas subsidiary. Secondly, due to COVID, sales and collections were affected, and stock got piled up, affecting the working capital cycle. Depreciation increased from 58 to 84 crores because of the 271 crores of Capex done in FY 18-19. The Capex for the year 19-20 is 235 crores against the guidance of 215 crores. As such, the profit before tax margin stands at 15% compared to 16.57%, and the current tax rate for the year is 25% compared to 33%, as the tax rate was reduced because of budgetary provisions of 2019. This results in a net profit margins which has improved by 1.22%, that is from 11.24% to 12.46%, that is 278.67 crores compared to 276.80 crores. These were all the updates for the year. Now let's quickly review the quarter and see what happened other than Corona. sales, the revenue for the quarter was down by almost 18.64% year-on-year. That is from 672.95 crores to 547.48 crores. The domestic volume in the quarter got reduced by 10%, and our realization of explosives is down by almost 15%. As such, explosives revenue was down by 23% from 382.48 crores to 294.53 crores. Revenue from initiating system was also down by 3.97%. That is from 76.37 crores to 73.34 crores. Revenue from Coal India was lower by 17%. Revenue from non-Coal India and institutional grew by 6.31% with our improved focus on private sector mining. Revenue from housing and infra was down by almost 30%, and export and overseas revenue grew by a marginal 2.05%. Our defense revenue was again down by 54%, that is from 57.27 crores to 26.48 crores. The raw material consumption in Q4 has decreased by 4.84% as a percentage of sales. This is on account of change of product mix. And even the ammonium nitrate prices were quite lower, that is rupees 25,362 per ton compared to 27,183 per ton, which resulted in lower realizations. The employee cost increased by 3.36%, again because of lower revenues. Other expenses are being increased by 6.24% on account of lower revenue and on account of sales promotion expenses when compared to similar quarter last year. The EBITDA for the quarter is 20% compared to 21.53%, and the interest cost as a percentage of sales has increased from 1.58% to 2.63%. And if you talk in absolute term, it is 14.42 crores compared to 10.63 crores year-on-year basis. However, it is in line with 14.11 crores of previous quarter, that is the third quarter. Now the depreciation has increased from 15 to 22 crores on account of Capex in previous year. The profit before tax stands at 13.33 compared to 17.75, and with the current tax rate of 25%, the net profit in absolute term is down by 29.31% to 53.18 crores from 75.23 crores. That is net profit margin of 9.71% compared to 11.18% in similar quarter previous year. So this was all the update on the quarter, and few other things which we would like to highlight is working capital. So the working capital days have increased from 90 to 113 days, mainly on account of increased inventory days due to COVID pandemic. However, the debtor days remains the same. It was only the inventory levels in the last 15 days. Now the debt to equity ratio is 0.5 compared to 0.49, which is slightly increased. The net worth is 1380 crores compared to 1238 crores, and the capital employed is 1658 crores compared to 1430 crores, which resulted in return on equity of 19.38% compared to 21.13%, and return on capital employed is 23% against 32%, and lower sales is the main reason which has, and why we could have lower sales. The reasons has already been explained to you. For the year we had a planned Capex of 215 crores. The total order book as on hand is 1304 crores, which comprises of orders from Coal India, Singareni and Defense. So now this was all the updates on our financial performance for the year and for the quarter. Now we would happy to take any questions, comments or suggestions that you may have. Back to you, operator. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Santosh Velapu from Ashika Stock Broking. Please go ahead.
So congratulations on the multi-mode hand grenade order, and I think it would be very key step on the defense business side for us going forward. Sir, I had 3 questions. What's the outlook on the international markets across key geographies? Second, what's the Capex outlook for, is there any still Capex spending for Tanzania, Australia, and in the domestic markets that we are planning for FY21? And lastly, which all ammunition, we heard that there are 3 ammunition tenders that got cancelled. Are there any, are these 3 where we were participating, or there are other ammunition tenders?
So first, Suresh Menon will take your question on our international.
We have seen a major effect of COVID in South Africa and a moderate effect in rest of the countries. However, the demand in Nigeria, Turkey, Zambia, and Tanzania is picking up. South Africa is affected because there are restrictions in underground coal mining and in surface mining because of COVID restrictions from the government side. Australia had travel restrictions between the country. This delayed our plant construction activity to some extent, but they have reopened the restrictions and reimposed restriction in certain states. Capex will remain the same. We are continuing with the same Capex that we had planned for in the overseas market. We are going to continue with the same Capex.
So I meant to ask, have we done the entire Capex in Ghana now, and Tanzania and Australia, are they done, or is it just that we are having some, we are trying to do some sample testing for the clients and getting their comfort, or that the actual Capex is yet pending?
As far as Ghana is concerned, the first phase of Capex is already over, and as we get more opportunities, more investments will be planned. And as far as Tanzania is concerned, the construction has already started, and the erection commissioning will start, and that is what we have said, that we are likely to start operation in the Q3 from this investments which we have been making. As far as Australia is concerned, in another 4 to 5 months, we should be able to finish the construction part. And the Capex program for Ghana is almost over. For Tanzania and Australia, it is in the pipeline.
Yeah, and about your question on defense RFP, so the 2 RFPs which got cancelled was 30 mm and 122 mm grade, and one which is still under consideration is DMCS. So I hope we answer your 3 queries.
Okay, sir. Thank you, sir. I'll join the queue.
Thank you.
Thank you. The next question is from the line of Bharat Shah from ASK Investment. Please go ahead.
Yeah, hi, Manish. Just wanted to highlight the background and the events leading to Mr. Kailash Chandra Noval's stepping down as a director.
Yes, sir. As far as the vacation of office of Director's Office of Shri Kailash Chandra Noval is concerned, it is basically that vacation of office is automatic as a Director of Solar Industries India Limited by operation of law. The facts and circumstances related to this issue has been brought out in the disclosures by the company before the stock exchanges on 31st July 2020. I think those disclosures, the required disclosures has been made, and this is what are the information as of now.
Would you like to elaborate that a bit?
Sir, I think the required disclosure is already being there, sir, and the effect of this disclosure, one was the vacation of office, which is already known. As far as the other impact because of this transaction, the legal team will take care and take the necessary or appropriate actions as per the legal opinion sought by the company.
And any comments on what may happen to the shareholding of Mr. Kailash Nowal going forward?
Sir, this issue is related to cessation of office and not related to the shareholding aspect. As far as shareholding aspect is concerned, shareholding will still remain with him only.
Which means the rest of the Nowal family will hold about close to 45%.
Sir, the promoter family, which includes all the family members, are still holding the same equity. And as per our family settlement, the equity will remain within the family or as per the terms spelled out in that.
Okay. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Bhagesh Kagalkar from HDFC Mutual Fund. Please go ahead.
Hi, sir. Bhagesh here.
Yeah, hello. Yeah, hello.
Can you give more specific on the defense part? Last year the revenues, and secondly, going for the Pinaka products, we have been doing a lot of development activity, and they have cleared the Pinaka systems. And so over the 3 years, what is the scope in defense now? How much revenues now actually we can generate? Because it has been a very long activity for us, essentially.
Yeah. So Mr. Nilesh has already shared about the defense revenue which we have achieved in 1920, which is 122 crores, and whereas in the previous year it was 170 crores. Our target in this year, 1920, was basically, earlier target was 250 crores, then we said that we are likely to reach 200 crores. But due to delays and deferments, delays of shipments and delay in getting the fresh orders resulted into the less numbers in 1920. As far as future expectations are concerned, looking at the current RFP of multi-mode hand grenade, which is in the final stage of award, and that will definitely put us into a reality mode, what we have been sharing over last couple of years. So once that RFP in place, our defense revenue from defense segment will really get a big boost. And as far as Pinaka is concerned, like we have shared that we have set up a complete integration facility for rockets and missiles. So that will definitely help Solar to be in one of the key player in this sector. As far as technology absorptions are concerned, we have already in the line for Pinaka Mark 1, Pinaka Mark 2, and now we have also working on this Pinaka guided missile. So based on the developments and efforts over last 4 years, we are a production agency for these items. And once the decision which has been taken by the recent Defense Acquisition Council regarding expanding the regiments for Pinaka, we will see a boost for these products. And we will share all the development as and when it really happens.
Roughly, one cannot quantify right now because how much portion will come to Solar and how much will go to DRDO or other bodies.
It's too early to really spell out what will be the share of private and government sector, but definitely it's a matter of few months. We will all come to know about the final policy decisions of the government. But if you look at the recent policy announcement which has been there in last couple of years, which was in Make in India, then the recent decisions by the government really give a big push for making ammunitions in India and make our country self-reliant, these policy and push will definitely give a positive support to the private players in India. And solar will be one of the key ammunition player in this segment.
Okay, thanks. That's all from me.
Thank you, Jay.
Thank you. The next question is from the line of Lokesh Manik from Valiant Capital. Please go ahead.
Yes, good morning, sir.
Yeah, good morning.
My question was regarding the initiating systems. I wanted to know whether these systems are compatible with competitors' products, and can they be sold separately, or they have to be sold as a package with package explosives?
Yeah. As far as the initiating systems are concerned, many companies in the world have the complete range of products. However, many companies, except top 5-10 players, nobody have the complete range of products. And as a matter of sales practice, we don't see that initiating system is necessarily to be coupled with the package and bulk explosives. But as a matter of practice, as a matter of prudent practice, many people prefer the initiating systems and the bulk explosives or package explosives to be supplied from the one source, so that in case of any kind of misfailure or failure or non-performance, they can hold one party accountable. This is a practice which depends and vary from player to player, customer to customer.
Okay, but they are compatible with competitors' products, other products in the market.
By and large, yes, these are compatible, but in some of the products, in some of the cases, those products doesn't fit to each other.
Understood. So, and my second question was on the defense segment. So, we have been investing for quite some time in this segment, and I just wanted to know: is there a benchmark, that we are looking at for sales generation, or for fructifying the existing Capex before we commit more towards it?
Like I have shared that we were waiting for a few RFPs to release in the last 1 year, which got delayed. And I think the multi-mode hand grenade RFP is in a final stage. It doesn't mean that this is the only RFP which is about to come. There are various smaller RFPs also in which we have participated. And based on the ground reality and the positions, we are quite confident that these will fructify very soon, and we will not amend our Capex programs. However, COVID can definitely make some kind of deferment in those Capex programs, which we will keep sharing with you, all the people. But as of now, the technical and the price negotiation for RFP of multi-mode hand grenade is over, and the contract awards should be awarded soon.
Sure. That's it from my side. I'll come back for more in the queue.
Okay.
Thank you.
Thank you. The next question is from the line of Sagar Naik from Equentis Wealth Advisory Services Private Limited. Please go ahead.
Hello.
Yes, Mr. Sagar.
Yes. Good morning, everyone. Thank you for this opportunity. So I had 4 questions. First one is, so Western Coalfields has inaugurated 3 new mines, 1 in Nagpur and 2 in MP. So have we got any contracts for these? Second would be, one of the competitors has received. Hello.
I'll just tell you, for this coal mines, especially of Coal India Limited, it is a centralized tender, and not a mine specific or subsidiary wise tender.
Okay. So will we see any addition from these 3 mines in the next year?
Yeah, so they have their own mining plan, and whenever they will come up with the next tender, these quantities will get included based on what is the requirement.
But yes, with the starting of the new mines, definitely it is in line with the Ministry of Coal's projection, which they have already shared, and it is available in the public domain. Based on that, they are keep opening the new mines, and in WCL, these 3 mines opening will give a boost to the coal production from Western Coalfield Limited. and we have a very strong presence in this belt. And the opening of these mines, definitely there will be an advantage to us.
Okay. The second one would be, so one of the listed competitors has got a license for RDX and HMX. And in the last quarter, they have even won an order in Turkey. So how do you see this playing out for solar?
We will share what we are doing. It is difficult for me to comment on my competitors' product launch or the orders which they are getting.
Okay. So the third one would be, the employee costs have increased from 49 crores to 57 crores quarter on quarter. And generally we see that increase in Q1. So what would be the reason for this?
The three basic reasons were there. First was the annual increase of wages, which starts from the 1st of January. Second reason was the lower sales in the Q4 due to pandemic. Third reason was the growth which we were expecting from our defense and overseas during these quarters was not up to the expected numbers. Although the people are on the ground and we are doing good things, and we are quite hopeful to reverse this trend of percentage of staff cost increase in the total matrix. So we will see the improved numbers from Q2.
So if you had the revenue would same, the increase would have been marginal, 1.5% only, and had it been more as per our earlier guidance, then this would have been flat or lower than the percentage which is getting reflected.
Okay. And the last one is, you mentioned in the opening remarks that there has been a delay in the defense delivery schedule by clients. So if you could give any quantum and, when would this be realized in this year, if you can share that. So that would be the last one.
Yeah, so these deliveries, as we said, got shifted. So typically from last year, now this has come into the current year. So accordingly, we are expecting that in this year.
And from quarter 2, we will see the improved numbers for defense products sales.
Thank you. The next question is from the line of Shreyas Pankwala from Canara Robeco Mutual Fund. Please go ahead.
Thanks for the opportunity, sir. Sir, a couple of questions. So, in the earlier remarks, you said our June performance has been better than compared to last June. So is it on the domestic operations you are referring, or at the company level?
We were saying about the June 20 was based on a company level, not on a domestic front only. It's combined, and it's a combined number which I have shared.
Sure. So is it so more or less both are doing equally well, or actually overseas has done better than domestic, and hence your overall average number looks more or less similar to or better than last June?
Looking at the COVID pandemic spread in India and other parts, definitely the improvement is there in domestic market also, but overseas has started doing better.
Sure. Secondly, on the overseas front, so we don't have the numbers for FY20, but can you share some light on how has been the performance, especially in Nigeria and Turkey? Did we had a flattish growth over FY19, or did we had some growth on year-on-year basis?
1920 or expected growth in 2020?
No, sir. No, 1920.
Yeah. As far as the individual geography-wise concerned, it is difficult to share each geography at this moment. But overall, the revenues from the countries, especially Nigeria and Zambia was pretty down. Nigeria was pretty comfortable. The significant drop was there in the sales from the Turkish market, which we have been sharing with you, all the investors, that due to the political situation and the geopolitical equation changing in the ground, there was a drop in demand, The currency hit was also there. So these were the key reasons.
Okay. And sir, of the 793 crores of FY20 revenues coming from exports plus overseas, how much would be from overseas?
From overseas, it was 646 crores.
And how much was it, sir, for FY19?
700 crores.
Okay. So, sir, how do we see these overseas revenue broad, if you can throw some light, panning out in FY21 based on the current scenario, how things are moving?
I have already shared in my initial remarks that based on the current situation and the green shoots which are quite visible, we see a good turnaround in the revenues and bottom line from the overseas operations. And with the results coming out after the Q1, say specifically for Q2, we will see significant improvements.
Okay. So earlier our target was around 900 crores, if I'm not wrong, for FY21 for overseas. Is it good enough to assume that possibly that target for FY22 is achievable since we would have some disruptions due to COVID?
Yeah, if we summarize that why the revenue from overseas was lower than our target, then the key reasons are like this. First was there was a reduction in commodity prices, as a result of which the overall realization has gone down in line with the commodity prices. Second was that in Turkey our sales has went down. Although our market share has not reduced, it has gone up slightly, but the overall demand was down. And our sales from Turkey, although it will be shared in our annual results, annual reports also, but the sales from Turkey was dropped by almost 18%, and Zambia was also dropped by more than 10%. So if you look at the overall reason, then first was commodity prices, second was drop in sales from Turkey side, although we were expecting sale increase, and third was our initial challenges in establishing ourselves in South Africa. So these three were the reasons of reduction in the sales. But looking at the current situation, I repeat again, in 2021, we will be near to the initial target which we gave for 1920.
Thank you. The next question is from the line of Rohan Gupta from Edelweiss. Please go ahead.
Hi, sir. Good morning.
Yes. Good morning, Rohan. Tell me.
A few questions from my side. So first, sir, you gave a cautious statement for the current year that though you will try to achieve the current year revenue, but it may be 5 to 10% down. So is the standalone you are talking about, or on a console level you are talking about that revenue will be lower by 5 to 10%?
The statement was for the whole year and not for the period for June onwards. The reference was given, or the reference was in relation to the COVID pandemic and its impact for the whole financial year 2021.
On a consolidated level, right?
Yes, on a consolidated basis.
Okay, so while we are very optimistic about the international revenue still being achieved by close to 900 crores, so it means that we are looking definitely all the impact of almost 20% coming from the domestic market and also some impact of defense.
Like I said that there will be a turnaround in overseas. We are expecting improved numbers from different segment. However, looking at a COVID pandemic related impact in the local market, definitely demand from the housing and infrastructure will be low. Although I don't see, or based on the ground reality, it doesn't reflect that the demand from coal mining will go down. But definitely there can be impact on those things. Based on an overall estimation and overall analysis, we have said that we are expecting that the revenue in 2021 should cross the revenue of 1920 despite of all these challenges. But on a conservative note, we said that if pandemic spread or say second wave of pandemic starts, if a lot of lockdowns are in place, like we have seen in India and we have seen in South Africa also, Then, on a conservative note, we feel that the revenues can go down also, which we are not sure of at this stage. The situation is quite complex and nobody can predict the firmness at this moment. Hope you will understand why we have shared these things.
Definitely, sir. Sir, definitely the current scenario remains very volatile, and many companies have taken multiple cost initiatives to reduce the cost and maintain the margin. Do you see that we are still in the process, and in Q1, we have taken many cost initiatives, and that will reduce our overall cost because our operational utilization probably in Q1 will be significantly impacted. So I just wanted to understand that in terms of cost initiatives, what kind of initiatives taken by the company?
The company has taken various initiatives to address the current challenges, and we will be sharing the key initiatives in our results, which will be announcing after we complete the limited review of Q1 numbers. So I think it will be fair for us to share in those Q1 reviews.
Okay. The third one is, sir, this 3 RFPs which got cancelled. So in our defense order book, were we building any revenue from those RFPs?
No, we are not capturing those RFP into our revenue potential or revenue target from defense related products.
Thank you. Rohan, we would request you to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. The next question is from the line of Vikas Rajpal from Reliance PMS. Please go ahead.
Hi, sir. Good morning. Sir, I'm fairly new to the company, so pardon me if any of the questions seem repetitive. So, first question is on the line, basically on the order book that you get. So, is your order book capped on the margin or on the ROE front from Coal India or from the defense sector?
Yeah, so the margin is not capped. However, we have this price escalation clause, which is there with them. So typically in bigger tenders like Coal India, so where it is a 2-year tender, and there are various factors which are built into it. So accordingly, it is there. And even with our other major customers, we have similar price escalation clause. As far as one set of customer is concerned, that is housing and infra, there we are doing it on a regular basis, but it is against as per the market parameters.
Okay. And so the other question is regarding the Turkey operation. So we do a fair level of business from Turkey, and as you said previously that the demand has gone down. So the demand has gone down. Is it because there has been some import duties on imports from India, or is it a general demand decrease which you have been seeing?
As far as revenue from Turkey is concerned, this question has no connection to that, because Turkey as a country imports from various countries. Even if there is an import duty from the countries like Asian region, it is uniform for all the people, except European countries. They have some concessions on import duties. Otherwise, it has no relevance or no connection to our sales from Turkey operations are concerned. But like I have been sharing, that last year was quite bad as far as Turkey is concerned. But now, based on the current estimation and current reality, the business is doing good now.
Okay. And sir, lastly, just a follow-up question, like in the next 5 years, what kind of a revenue target that you have internally?
Sir, at this moment, we all are passing through certain challenges, especially arise out of the COVID pandemic. Once I think it gets settled, we will be able to answer this question. It is difficult to give any kind of guidance for next 5 years.
Thank you. Vikas, we would request you to please come back in the question queue for any follow-up questions. The next question is from the line of Nitin Gandhi from KFS Trade Capital. Please go ahead.
Hello.
Yeah, hello.
Thank you very much for taking my question. I have 5 questions. But to start with, just to give some color on what's the size or opportunity of this multimodal hand grenade, which is being discussed at this point of time, and over a 3 years time frame, how big opportunities can be. From the order side, I'm not saying our solar shares. I'm just saying from the India's requirement point of view.
Yeah, like we have shared in the last year that the RFP was for 1 million pieces to be supplied in 2 years from the date of award of contract. So this is the first answer. Second, we are a production agency or the nominated agency for this product apart from Ordnance Factory Boards. And this RFP was basically for getting the products from private sector and not from the Ordnance Factory. They have other orders on nomination basis to them. As far as the opportunity in future is concerned, so we will definitely share more on this once the first stage of awarding the contracts to the private player, especially in ammunition, gets over. So that will be the first big milestone for private ammunition manufacturers in India is concerned.
But if the size is somewhere around, say, 20 million, 30 million, 50 million, what is it approximately overall?
I don't have those figures at this moment. As far as the value of the product is concerned, we will share the total value of the order once RFP is awarded to us.
No, that's okay. I'm not speaking value. I'm just speaking in quantum requirement of the country. Anyway, secondly, ROC, can we share how much is overseas deployment and how much is on defense out of capital?
Which one? Please repeat again the question.
Our total capital employed is approximately 17 billion. So can you share how much is in overseas and how much is for defense?
Defense business, as such, we have been sharing that. The investment till last year was almost 500 crores, and to be precise, it is around 540 to 550 crores for defense segment. Rest all is for the products for non-defense.
Okay. And overseas, how much is capital employed?
Out of the total capital employed, 540 to 550 is for defense. The rest all is for India and overseas countries.
No, I'm speaking only overseas figure. I am not worried about India figure.
We will share the exact number
I'll drop a mail or talk to somebody. And the next question was there was a postponement of business from Q4 to Q1. So can you quantify that?
Postponement of?
Certain business which could not be completed in Q4 because of the delivery issues. That revenue is postponed to Q1, right?
Q2 defense revenue, no, you are talking about.
Yeah, correct. So what is it?
Yeah, that is the Q2.
Okay, so how much is that figure?
That figure is roughly around. Yeah, we'll share it. You put the mail, we'll share it there. How much is the figure?
Thank you. Nitin, we would request you to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. The next question is from the line of Bharat Shah from ASK Investment. Please go ahead.
Manish, should we look at our business in 3 parts, relatively more short-term, like consumables, whether in mining, roads, housing, etc., or the more medium-term, tender-driven kind of business of Coal India and others, or a long-term business like defense, which has a longer sales cycle and greater amount of effort over a period of time. How would you view overall on a long-term basis likely shape of business into these 3 parts, so that there is a short-term one which is kicking in all the time and it is reasonably replicable and quicker, more medium-term part as well, which is work in progress, and long-term, which is even a longer work in progress? How would you like to visualize?
You have rightly analyzed, sir. Basically, if we divide our business into these three kind of business portfolios, first is the mining. So we see that mining growth will be there in India because of the recent policy changes announced by the government of India, where private players will be allowed to participate in the mining. So that will definitely create a situation where efficient suppliers in each area will get more reward compared to a normal situation which we have seen in last 20-25 years, where everybody gets the order despite of various issues. So in future, the competitive players who will offer a best techno-commercial offer will get more volume. So that will give us a advantage. Second, sir, you said about the road and infrastructure related products or products towards that segment. So we believe that this side, we expect that once the current phase is over, from October, November onwards, we will see a spurt in demand. And we are well positioned. We are also working on taking some strategic initiative to enhance our footprints in Indian market also. So it's strategically very important for us. Third is the overseas market. Our foray into South Africa and Australia was to enhance our market presence and market perception about solar in a global market. And although the results from these territories were quite lower than our expectation, we struggled a lot. But I would like to share that the situation which is emerging for us in those markets is quite positive, and it is in line with our strategic intent. And defense is, yes, it's a long-term business, like of those products that takes long-term. But if you look at the delays in starting the releasing of RFPs and then finalizing. So, sir, over the years, there was no policy in place to buy ammunition from private sector first. Second, the real push was not there. But with the recent policy in place and push is there, where any import of ammunition, if it is 200 crore plus, the government has straightforwardly announced that they will not import any ammunition if it is beyond this limit. It will open a gate of opportunities for players like us. There are various items required by the services which are smaller in nature, even 40 crores, 50 crores, 70 crores, and the ammunition stocks are also low if we see the reports which are available in public domain. So if we combine all these scenarios, we believe that housing, infra, mining and overseas will do very well. Defense will start now and it will give us a good boost to our bottom line, because the Capex, the major Capex and the time which we have spent on absorption of technologies, qualifying the product is already over. But going forward, we will add more product portfolios and that will take time. So going forward, we believe that 20% of revenues should come from defense in future. However, since defense is a more capex oriented, long gestation, so definitely EBITDA margins will be better than the explosives. And the overseas and India market will be well spread, so we can expect that 50% will be from India, 50% from the overseas, and rest all will come from defense.
Thank you. The next question is from the line of Rohan Gupta from Edelweiss. Please go ahead.
Yeah, hi sir. Thanks for the follow-up. Sir, the question is on the family arrangement which you mentioned that Mr. Kailash and then the other family members. So those shareholdings will still remain with them. Is there any arrangement between the family members that you guys have first right of refusal in case of any other family members want to sell the shares?
As far as this matter is concerned, I would like to share that there is a family settlement. Deed is there, and every transaction arise out of this will be within that only.
Sorry, sir. Can you please repeat again?
I am saying that any transactions related to shareholders are concerned, promoter shareholders, it will be dealt within the family settlement, as per the family settlement deed only.
Oh, okay. So family members only have the first right of that.
Yes.
Any exchange of shares. Okay.
Yes.
Okay, so that's all. Thank you, sir.
Okay. Thank you.
Thank you. I would now like to hand the conference over to Mr. Manish Mahawar for closing comments.
Yeah, thank you, Aisha. On behalf of Antique Stock Broking, I would like to thank the team of Solar Industries for providing us an opportunity to host the call. Manish, would you like to make any closing comments, sir?
Yeah, so on behalf of Solar Industries India Limited, we would like to thank all the valued stakeholders for listening to us patiently and giving us their suggestions, feedback and thought process. We will definitely work in the direction to ensure that the value of stakeholders is enhanced. Thank you so much.
Thank you. On behalf of Antique Stock Broking Limited, that concludes today's conference call. Thank you for joining us, and you may now disconnect your lines.